Hello, welcome back to yet another episode of ABCD, Anybody Can Do. Well, today at the season 2, I'm going to talk about the accounting part a bit. Basically, I'm going to inform you about the accounting ratios. So, accounting ratios or the financial ratios, which are a very important part both in accounting as well as at the finance as well. Well, you see, why people do accounting ratios? We have to understand that organizations of similar nature wants to see whether they are competing with one another, whether their performance is good, whether they are efficient enough to survive in the competitive environment. So that's why organizations wants to see their financial data talking. They want to see the financial data performing. So, why do accounting ratios? Doing accounting ratios gives every company the understanding, number one, how they are performing. Number two, how competitive they are in the market. Number three, in comparison with the industry's average, how well they are doing. Number four, whether they want to still continue doing their business, and finally whether it's a time to shut down their activities. So, and these are the ways that people would find out that why accounting ratios or the financial ratios are so critical. Most of the entities will straightforward go for what is known as the liquidity ratio. Well, the liquidity ratio talks about the current asset to the current liabilities. Of course, the ideal situation for a current asset to a current liability would be 2:1, which means for every £1 or for every $1 of the liability, organization is having at least $2 of its current assets. So that's what liquidity means. And of course, liquidity is the heart of the business. If organizations have liquid fund, it can survive in a longer run. Whether or not is the company being able to pay its day-to-day bills. That's why liquidity is so important. Now, more than 2.1, what people are interested more is the asset test ratio. So, it is the current assets minus the closing stock, and again divided by the current liabilities. Why the current asset minus closing stock? Of all the current asset, not the receivables, okay, not the accounts prepaid. So why the closing stock is subtracted? Because we have to understand that closing stock is very vulnerable in terms of its valuation. Say at the mid of a winter season, an organization might be selling, say for example, the heaters. So it has got a huge stock of heaters. Similarly, that organization, for example, during the winter time when it finishes off, summer comes in, still they have huge amount of heater left in the organization. But during the summer, to sell the heater is, of course, the valuation will be too less. So that's why organization wants to really find out whether or not it is actually performing well in terms of its liquidity. That's why it's a current asset minus closing stock divided by the current liabilities. So the ideal ratio for the industry would be 1:1. So that's liquidity. Now, for example, an organization might want to see that their current asset, okay, in terms of liquidity ratio is 4:1, where the standard was 2:1. Now, in comparison to 2:1, this company is having 4:1. So, are they doing good? May not be. Most of the people would say, no, not at all. Why? It's just because since 2:1 was standard and this organization is maintaining 4:1, that means they are having more of the liquid assets which are underutilized, which means they are not utilized at all. So I'm sure the shareholders and the stakeholders will not feel confident on those organizations who keep so much of their idle cash as idle. So that means if it is 2:1, the ideal scenario would be 2:1. So an organization having 2:1, another one having 4:1 of similar type of nature, so we would prefer 2:1 than 4:1. Same thing goes for the acid test ratio. When 1:1 is the standard, if an organization is having 3:1 or 6:1, so both of them. So I hope this was helpful for you, for those who are just beginning to do the liquidity ratio. Okay, so in that case, I hope to see you in my next video, so with more informative information on the accounting ratios and financial ratios. If you think it was helpful, beneficial, then do like, do subscribe, and don't forget to share the video. So until next time, I'm going to sign off for today. So hope to see you soon. Take care and ciao from now.